What's up everyone, and welcome back to Explain the Charts. Today is November 27th, 2025, and we are doing a deep dive into Meta platforms, ticker symbol Meta. There has been some massive news driving the price action recently, so first we'll cover the headlines and the fundamental story, and then we'll jump straight into the charts to see what they're telling us. The biggest story right now is the report that Meta is exploring a multi-billion-dollar deal to purchase custom AI chips, or TPUs, from Google's parent company, Alphabet. This is a huge development for a couple of reasons. First, it signals Meta's strategic move to diversify its AI hardware supply and reduce its heavy dependence on Nvidia, which has dominated the market. This could give Meta more pricing power and flexibility in its massive AI infrastructure build-out. The market has reacted very positively to this news for Meta, with the stock jumping over 3% in recent sessions. Conversely, this news has put significant pressure on competitors. Nvidia's stock fell sharply, dropping over 4% on the report, as investors weighed the impact of one of its largest customers seeking alternatives. AMD, another competitor, also saw its shares decline, as the AI chip landscape suddenly looks more competitive. This news comes after a volatile period for Meta, which saw its stock drop over 12% in a single day about a month ago following its third-quarter earnings report. Despite strong revenue growth then, a headline earnings per share miss, attributed to a large one-time tax charge and concerns over rising costs spooked investors at the time. Now, let's bring up the daily chart to get the long-term perspective. As you can see, Meta had an incredible run-up for most of the year, peaking at its 52-week high of around $796 back in mid-August. Since that peak, the stock entered a corrective phase, trading sideways and downwards for a couple of months. The most dramatic feature on this chart is the massive gap down we see right here at the end of October. This sharp drop from the $750s to below $670 was the market's reaction to that Q3 earnings report we just discussed. That event created a significant psychological resistance level, and the price spent most of November consolidating well below that gap. Following that drop, the price found a bottom in mid-November around the $580 to $590 level, which now serves as a major area of support. The price bounced off that support and began to slowly grind higher. Then, just in the last few days, we see this powerful bullish move. These two large green candles represent the market's enthusiastic response to the Google AI chip news. This move has pushed the price up to its current level of around $633, breaking out of the recent consolidation range. From a bullish standpoint, the story is compelling. A strong fundamental catalyst has broken the price out of a month-long slump. However, from a bearish perspective, the stock is still trading over 20% below its 52-week high, and that large earnings gap overhead represents significant resistance. The key battleground for bulls is to push past yesterday's high of around $638. If they can do that, the path towards filling the gap to the $670 area looks much more likely. For bears, a failure to break that $638 level could see the price pull back to test support, first at the breakout level around $618, and then the more significant support zone in the $590s. Let's switch over to the 1-hour chart to get a closer look at this recent rally. Here we can clearly see the explosive move that began on November 24th. Notice the strong volume that accompanied this push higher, which gives the breakout more validity. The price gapped up on November 25th, leaving a support zone between roughly $618 and $624. Since reaching the high of nearly $638 yesterday, the price has entered a period of consolidation. This sideways price action is very common and often healthy after such a strong and rapid advance. It allows the market to digest the gains before the next potential move. Traders are watching this consolidation pattern closely. It could be forming a bullish flag or pennant, which are continuation patterns that often resolve to the upside. The key support in the immediate short term is the low of this consolidation range, around the $631 level. A break below that could signal a deeper pullback towards the gap support we identified around $618. Conversely, a breakout above the top of this range at $638 would signal a continuation of the rally. Now let's drill down even further to the 15-minute chart to analyze today's intraday action. As we can see, the trading day started near yesterday's highs, but has since seen a mild pullback. The price opened at $637.69 and has established an intraday low so far at $631.63. This action reinforces the consolidation theme we saw on the hourly chart. The price is currently hovering around the $633 mark, seemingly finding some temporary stability. For day traders, the levels to watch are very clear. A break above the intraday high could retest the $638 resistance, while a break below the $631.63 low could accelerate selling pressure towards the next support levels. Volume today appears to be lighter than the past two sessions, which is typical of a consolidation day. The market is essentially taking a breath and waiting for the next catalyst or a clear directional signal. Let's go back to the daily chart one more time, but I want to filter the view to really emphasize the significance of recent events. Here, we are looking at the price action from the beginning of October until today. This perspective makes that massive earnings-related drop on October 30th incredibly stark. Look at the huge red candle and the explosion in volume on that day. It was a clear sign of institutional selling and a major shift in sentiment. Following that, you can see the month-long period of uncertainty where the stock struggled to find its footing. And then, right here at the end, these two powerful green candles on November 24th and 25th, also on high volume, show an equally powerful shift back in the bullish direction. This visual makes it crystal clear how fundamental news can directly translate into dramatic price movements and completely change the technical landscape. So, to recap everything and look ahead, let's lay out the key price levels and potential scenarios. Your immediate support level to watch is the bottom of the current consolidation, around $631. Below that, the next significant support is the top of the gap from the breakout, around $618. The most critical long-term support remains the November low in the $580 to $590 zone. On the upside, immediate resistance is the recent high of around $638. If we can clear that, the next major target for bulls is to begin filling that earnings gap, with the first major hurdle being the bottom of that gap at approximately $670. The ultimate long-term resistance is, of course, the all-time high near $796. So, what are the likely scenarios? The bullish case, which I believe has about a 65% probability, is that the positive momentum from the AI chip news will continue. In this scenario, after this brief consolidation, the stock breaks above $638 and makes a run towards the $670 resistance level in the coming weeks. This would be reinforced by continued strength in the overall market and any positive updates on the Google deal. The bearish case, with a 35% probability, is that this rally was a buy the rumor event and loses steam. If the stock fails to break resistance at $638 and instead falls below $631, it could signal a retreat to test lower support levels like $618 or even $590. A broad market downturn or any negative news regarding the feasibility or terms of the AI chip deal could be the trigger for this scenario. Going forward, keep a close eye on any official confirmations about the Meta-Google partnership and watch the Nasdaq's performance, as it heavily influences big tech stocks like Meta. And that wraps up our analysis for today. Please remember, this video is for educational and informational purposes only and should not be considered financial advice. Trading and investing involve risk, and you should always conduct your own thorough research before making any financial decisions. If you found this breakdown helpful, please hit the like button, subscribe to Explain the Charts, and let me know your thoughts on Meta in the comments below. Thanks for watching, and I'll see you in the next video.